Good morning. I'm Jagendra Rana, and topic of the day is health insurance is the largest segment in general insurance. Health insurance is the largest segment in general insurance. Say health insurance commands 41% of general insurance premium. So the health insurance segment, which surpassed motor insurance as the largest segment in the general insurance in the post-COVID boom, it accounts for 41% of industry premiums, with motor insurance continuing to cede ground. In the April-July period, the general insurance industry recorded a gross direct premium of rupees 1.01 lakh crore. Health insurance accounted for 41% of these premiums, compared with motor insurance 29% share. So for context, motor insurance was the largest segment in the general insurance industry until financial year 22. The segment accounted for 34% of rupees 1.99 lakh crore of GDPI in FY22, while health insurance held 32%. So the motor insurance premiums have stagnated as a percentage of industry GDPI over the past 3 years, while health insurance has consistently grown year on year. So this stagnation to factors such as the lack of third party premium revision, slowdown in new car sales, and the base effect of high sales during the post-pandemic period are the reasons attributed for the degrowth of motor insurance. The constant or no increase in third-party insurance premiums since 2022 has limited the overall premium growth. The third-party premiums often form a substantial portion of motor insurance revenue, and their stability has constant growth. So motor insurance is split into own damage coverage for the vehicle repairs and TP coverage for third-party damages or injuries. While OD premiums are set by insurers based on the vehicle's value and risk factors, TP tariffs are regulated by the IRDAI. So the absence of TP rate revision coupled with high claim payouts has also led many insurers to slow down on motor insurance. For instance, Go Digit, which holds a 6% market share in motor insurance, saw its TP premium share drop from 36% of rupees 2,178 crore gross written premium in Q1 FY24 to 29% of 2,660 crore in Q1 FY25. So the challenge we have seen in motor TP business in the last 3 years is that there has hardly been any price increase. There is always a bit of inflation in TP claims. The lack of TP price hikes continues to put pressure on the industry's motor combined ratio, a key profitable measure. So while there has been some improvement in the overall combined ratio, the motor combined ratio remains under strain without a TP rate hike. So on growth of health insurance, the reasons attributed to the premium growth is rising awareness, healthcare inflation, and the resulting increase in health insurance premiums. Health insurance premiums are rising by 10 to 15% annually due to medical inflation, unlike motor insurance. Large private insurers are poised to benefit from a multi-year upcycle in motor vehicle sales, driven by a shift towards premium high-value vehicles. So, two-wheeler sales are recovering after a long slowdown, and pockets of CV, that is high tonnage, are seeing improvement. Pockets of CV means commercial vehicles, high tonnage. So potential pickup in new PV sales or hike in motor TP pricing can be a positive catalyst. Now, the general insurance sector of India is projected to expand by 11.2% this year. So thanks to personal accident and health, motor and property insurance lines, which account for the majority, 93% share of total general insurance premiums in 23-24. In May 2024, the non-life insurance industry reported a premium of rupees 20,907.5 crore, growing at 14.9% compared to 18.1% growth reported in May 2023. So the industry's growth has continued to be underpinned primarily by the health and motor insurance segments. Meanwhile, the fire segment reported a subdued year-on-year growth of 4.2%. So public sector general insurers, May 2024 numbers rose by 7.3%, less than the 12.8% reported in May 2023. On the other hand, the private sector general insurers reported a growth of 18.4% for May 2024 versus 20.6% in May 2023. So the May 2024 numbers have demonstrated substantial growth, which can be primarily attributed to group health and motor insurance. Our motor insurance underperformed relative to their May 2023 growth rates. Hence, May 2024 growth numbers came lower than May 2023 growth rate. Meanwhile, specialized insurers posted a drop of 48.2% in May 2024 compared to a rise of 27.1% in May 2023. Standard private health insurers continued their year-on-year growth momentum at 26.5% in May 2024. So compared to the 23.1% growth reported in May 2023. These standard private health insurers continue to gain a share in retail health from public general insurers. Further, two additional standalone health insurers are still selected to commence operations, and competition is expected to accelerate even further in financial year 2025. So the overall market share of private non-life insurance companies has witnessed a sustained increase to 66% for YTD FY25 from 63% in FY24 and 61% in FY23, highlighting the persistent growth differential between the public and private sectors. So health insurance premium continued to be the primary growth driver of the non-life insurance industry. This growth momentum has increased the segment's market share from 39.6% FY23 to 41.3% for FY25. This share is likely to reduce a tad in the coming months as other sectors start their growth journey. So the health segment has grown by 16.9% for YTD FY25, which is lower than the growth of 22.6% witnessed for YTD FY24. But the retail segment has continued its growth momentum. The rate has increased in May 2024 as well as FY24 compared to the respective prior periods. The group health segment remains the largest segment due to enhanced coverage and premium rationalization. This segment witnessed lower growth for FY25 compared to FY24. Meanwhile, similar trends were seen in the May 2024 growth rate, which was lower compared to May 2023. The government schemes fell in May 2025, which reduced their share to 6.0%. So the decrease could be attributed to lower spending amidst the recent general elections. For the premium, government schemes are generally concentrated with the public sector general insurance companies. Standalone health insurance generally focuses on retail, while general insurers account for a dominant share of the group. So the premium growth of the standalone health insurers and private general insurers continue to be higher than the industry average. Further, with IRDAI approving two new standalone health insurers, that is Narayana Health Insurance and Galaxy Health and Allied Insurance, competition is expected to be intense in financial year 2025. So the growth of the non-life insurance industry, excluding health, reduced to 15.7% in YTD FY25 from the 16.7% level, if health is included in the analysis. So further, a large proportion of this 15.7% growth is on account of the motor insurance segment, which accounts for approximately 50% of the non-life insurance excluding health. So FY25 has continued on a robust note with May 2024 growing at 14.9%. Broadly speaking, the first quarter of the financial year generally accounts for around 20% of the sector's premium, and this trend is likely to persist in FY25. So the industry demand will be substantial by robust growth in the health segment as well as in the motor segment. So additionally, competition is slated to rise, especially in the health segment, as new companies have commenced operations while others continue to be in line to enter the segment. So that reflects that the government may also take some steps to reduce the GST on health insurance premiums. So that is going to make good impact on the health insurance premium, because health insurers and industry observers said that the premiums are being increased due to the rise in medical inflation and the reduction in waiting period for pre-existing diseases from the earlier stipulation of 4 years to 3 years from April this year. The insurance regulator has also lowered the moratorium period from 8 years to 5 years from April. This means that policyholders who have paid premiums continuously for 5 years will be entitled to have all their claims paid by the insurer up to the limits prescribed in the policy. Like general inflation, medical inflation is a reality. The cost of treatment has been going up, in fact faster than general inflation. The companies have revised the health companion premium and have taken efforts to ensure that such revisions stays as low as possible and continue to be pocket friendly while beating inflation. So during the COVID pandemic, claims surged and the health insurance sector incurred losses, resulting in a hefty industry-wide increase in premiums. Though health insurers are profitable now, medical costs continue to remain high. This has resulted in health insurers hiking premiums for several popular policies for the second consecutive years. So in all, 52% of health insurance policyholders feel that their premium has increased by over 25% in the last 12 months. In fact, 21% of health insurance policy owners indicated that the increase in premium was 50% or more in the 12 months preceding May, while 31% indicated an increase of 10 to 15%. So IRDAI has initiated several measures to make health insurance a lot more consumer friendly. This includes lower waiting period and cancellation charges for policies and advocating the introduction of products for all type of treatments including OPD, means outpatient department. Thank you very much.